Welcome to the Telltales Podcast, where we discuss cash flow and its pivotal role in investing. I'm Mike Nicoletti.
And I'm Jason Wallace. Along with our co-host Hunt Lawrence, aka Mr. Cashflow, we're here to explore how cash flow drives the economy and investment performance.
And don't forget to join our email list at telltales.us to get the cash flow memo. It's about 20 pages covering 80 companies, the U.S. government's finances, and the energy sector.
It's like having a masterclass on investing in your inbox every week.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Good. Well, I think it's 3:30. Let's start. On Exhibit C has changed a little bit. I changed it last weekend to reflect some of the changes that we see in the oil demand and oil supply, but pretty much is the same, 4.4 million barrels of surplus supply. And OPEC and the IEA, which is kind of the organization of consuming states, OPEC thinks demand's going to go up over 2 million barrels, and the IEA operation in Paris thinks it's going to be about 1 million barrels. But the great advantage here is it kind of splits the difference. And I think this is pretty good. I have, since we talked last Wednesday about the risk premium in oil being $20, in other words, if somehow all the risk in oil went away and the Saudis produced flat out, that'd be $60 as compared to $80 now. So hence the $20 risk premium. And I don't find anyone that I talk to on a regular basis disagreeing too much with that. I think the point is that there'll always be some risk premium on oil. And a good question, follow-on question, would be what would have to happen for the risk premium to decline from where it is, $20? And I think the answer there is have Israel finish mopping up Hamas, have Saudi Arabia recognize Israel, have Iran be persuaded to stop funding Hamas, and, humanitarian efforts for the 2 million people in Gaza, but, kind of being governed by Israeli defense forces. I think that would calm things down. What does calming things down there mean? $5 less risk premium, $6. Another aspect of risk premium is Ukraine. And if they could be persuaded to stop flying drones into Russian refineries, I think there'd have to be kind of an organized stalemate between Russia and the Ukraine. The Chinese have a plan, which they say Russia has agreed to. The question is, what will Ukraine agree to? One of my colleagues or managements, one of our companies said, look, risk premium is also what does Saudi Arabia get upset enough with other people breaking quotas and produce a fair amount of that 4 million barrels of surplus? That is a risk, but Saudi Arabia's embarked on big projects, and they need the high oil price to accomplish the big projects, the biggest of which is building a new city along the Red Sea, which they call Neom. There have been some recent articles about how much money has gone into that. Exhibit B on natural gas, these numbers have changed a little bit. The LNG, as you can see, is 13.7 this year, up from 13. If I change it again, the power might not be as much as 37, up from 35.5. With all this publicity on power for data centers, power demand is kind of flat this year, or the amount of gas used for power is kind of flat. So, but there's no question that there's a trend here where the storage change last year, or addition of storage, was 3.4 Bs per day, which is 1 trillion of gas, to 1.7. And if you get that jump up in LNG in 25, you'll get down to no surplus. And So the futures curve at 350 there may be a case for that. U.S. government revenues and expenses. This needs to be updated. I'm afraid the 23 deficit, even without the student loan forgiveness, came out a couple $100 billion more than the $1.4 trillion. And this year to date, maybe more. Clearly, something has to give here. And I don't think it's taxes. We'll just have to wait till November and see whether we're dealing with Jake or Biden to have a view on that. And with that, Mike and Jason have a whole bunch of projects. And normally I try to get them going on one or two. And I think I'm going to leave it with them. I mean, there's so much information or things that have happened since last Wednesday in the tech business that I guess the first thing to cover would be, the dueling products between OpenAI and Google, and then, what exactly is Apple going to come up with in terms of an enhanced Siri or whatever it is. Jason, Mike and I talk for 20 minutes every morning. Why don't we let you lead the discussion on those issues, and Mike and I'll try to fill in.
Sure. We've been speculating what Apple's going to do for quite some time. And my takeaway out of the two announcements out of OpenAI and Google this week were it felt awfully like an audition for who's going to get Apple's business. The two announcements were remarkably similar. It almost seemed like they were operating from the same requirement set. So did Apple give them, this list of features that they were looking for to add to the iPhone, and then the two companies set off to develop them? Kind of my speculation. That's what it felt like. And they're competing against each other, and then this was a public audition for Tim Cook. Hard to say if that's true or not, but that's what it felt like to me. And both of the demos were super impressive. They've leveraged these AI language models into a multimodal capacity, so it can not only respond to you in text, it converts text to speech, converts your speech into text that it then processes. It can view videos out of the camera or what your screen on your device is looking at, and answer questions on those, as you ask it. So super, super impressive. Mike, what was your takeaways from the?
I agree with you that it's maybe an audition, or maybe the requirements were set by Apple. But I think that Apple's looking to set this up as a platform play, as they do with the rest of their business. So you will likely be able, again, this is totally speculation. Nobody's really writing about this yet, at least as far as I know. But I believe you will be able to choose a default, essentially, interface model for Siri for your iPhone. And it may have, may run deeper into the phone than, the existing app store. Likely it will have to have a free version so that everybody can have access to it. And likely there will be a paid version, which Apple will get 30% of the revenue on. So this way, it's really up to OpenAI and Google to try to win the popular share of customers and then decide who's willing to pay more for default status. So, again, hypothetically, if that's real, what we saw is OpenAI jumped the gun on Google. Google's launch date was well known and publicized, and OpenAI launched momentarily, just a day before. I thought it was interesting that their live keynote mentioned that it was live in the top left corner for maybe 30% of the presentation, and the rest of it, there was no live indicator there. So that's what tells me that they had probably had this sitting on the back burner waiting for Google to get closer or waiting for something in particular. This is really good for consumers. We've got two very well-funded companies competing to deliver better products for us. So I think that's all a win. And, we've been speculating as to where Apple's going to stand in all this, mainly because they haven't produced anything that's worthy of note. And maybe the conclusion out of all of this is that none of it really matters because they can be a platform, an aggregator, and provide the means to access these tools through their phones. And that's a win for OpenAI. It's a win for Google. And I think that all makes a lot of sense.
And a win for Apple.
Yeah.
They've been getting, people have been dogging on them lately, but I don't see how they don't come out on as a winner in this. They're going to take a 30% cut of whatever premium service is sold, and I think they're going to kick off a big upgrade cycle for iPhones with a new neural processor, AI processor packaged in that, they're going to say is required to run some of these new models.
Jason and Mike, what about impact? Is it a negative impact on Microsoft?
I don't think so. I mean, I think you can't get any more zero than zero. This isn't a market that Microsoft's ever really competed in. The best case scenario is OpenAI wins, which means more of their Azure services are utilized. So I don't really think it's a negative for Microsoft because this isn't really what they're in it for.
Right.
Google has a clear monetization path for this. I think OpenAI less so. But people said that about Facebook when they were going to mobile, and then they figured out how to make that their primary source of income. So I don't doubt that Microsoft and OpenAI won't do the same.
Mike and I were speculating this morning. Jason, do you think there's any way that a third option is Meta?
Absolutely. No one's talking about it, but they have just as much or maybe more skill in building these models than most of these companies. They've been quiet recently, but they've in the past have they've been optimizing their models to run on device. So more efficient, smaller models. And Mike and I go back and forth. I kind of think that's important, is that it's going to run on device. Your data will be private there. The latency will be lower. He thinks no one cares about that. It's going to go to the cloud. I'm coming around to thinking it's going to be both. And Google's announcement alluded to that too, that they have models that will run on device, a foundation model that runs on device. And I think that the result of that is that's going to figure out what kind of query you're asking of the AI. And then it's going to federate out that query to the proper cloud AI model. So if you're asking it to interpret what video the camera is seeing right now versus bring me information back from the internet, those are different questions for different AI models. So your phone will figure that out, and then it'll go to the proper cloud service for the real work.
I noticed, and Mike and I didn't talk about this morning, but I noticed in the paper that Comcast is going to try to bundle Peacock and Netflix and Apple Plus and offer that to their customers. Is that kind of inevitable to kind of rebundle to be more convenient?
I think so. I mean, the thing that doesn't totally maybe it does make sense. The concept with bundling cable channels is you could allocate value, spread the value out and make it better for everybody at the same time. It's a little bit harder with streaming. And their concept of you're going to get Netflix and Peacock and maybe a couple other things all in one package is nice. And they're also saying it's going to be cheaper. For some of those packages, for it to be cheaper and be a win, you'd have to be adding customers that you don't already have. Right. For Netflix, if they're going to do a deal where they only get $7 a user or whatever, they're going to have to figure out a way to monetize it. And maybe it's just the advertising revenue is enough to justify it. So yes, I think you got to figure out a way that everybody wins. And it probably takes a cable company to do it because they're They're pretty good at that.
Right. Jason, do you think that's a negative for Disney? I mean, Disney's talked about doing some kind of a combination with Warner and I forget who else, but the combination of Peacock and Apple Plus and Netflix seems more user-friendly than Disney and Warner. And
it does, but I think it's conditioning the consumer to accept packages again, and I think the consumer's ready for it. Seems like there's some fatigue about paying for 6 different streaming services, and in the end, it didn't end up cheaper for anyone. And Disney has ESPN, so that's their big golden ticket. I think they can bundle stuff with ESPN, and a large percent of the population will still pay for ESPN.
Right. Saw the Intel announcements this week about how they're financing their plants with Brookfield and Apollo, and I mean, is Intel, even though it won't appear on their balance sheet, are they going to get so over levered that they'll actually fail? Do you think, just because they don't? I'm looking at page 3. I mean, their free cash flow as of the last fiscal year was a negative almost $20 billion. I mean, do they go from being Intel to being something that has to be reorganized? Jason or Mike, do you think that's in the cards?
I mean, I call it a year ago, Jason and I went kind of deep on the idea that they would get a debt rating downgrade.
Right.
It's a lot of debt stacking up with not a lot of, they even if they generate the revenue, I just don't think there's going to be as much margin for whatever revenue they produce. You can't compare Intel to NVIDIA and expect Intel's going to get NVIDIA margins.
No.
And I think that's the wrong comparison too. I think Intel needs to turn into a Taiwan Semiconductor.
Right. I noticed that Taiwan Semiconductor, I didn't know some companies do this, but do they report their sales every month? Because they reported very strong sales in April, which everyone took note of.
They did, yeah. They reported really strong sales. They do every month. I don't know if that's a company specific thing or a Taiwan specific, but I enjoy that they do.
Because I mean, if you look at page 3, I mean, they've been spending all their cash flow, but you would think with sales that look like they might be 50% higher, a fair amount of that, they are spending $30 billion in capex, but I mean, with the higher sales, presumably pretty good margins on the higher sales, they should get to the point where they can cover their capex and have some cash flow left over.
Yeah, I think they kind of had a hiccup, if you will, on their 3 nanometer process. So the first instance of building that, Apple was the user. I think their M3 chip was built on that. And then the way they planned their fab and the architecture there was kind of a dead end. They had to redesign it. And they went through that process last year. So I think this is finally now getting customers onto the new 3 nanometer architecture and ramping sales there.
Right. I updated page 7, which is MasterCard and Visa and PayPal. I still have trouble seeing how PayPal is going to make their way in the world, even though they're trading at like less than 20 times free cash flow, where MasterCard and Visa always trade at 30 times free cash flow. Where do you, with technology, Jason and Mike, where do you see a risk to MasterCard's business or Visa's business? I mean, is there something out there that would replace their, for example, Apple Pay is, I think, run on Visa. They seem to be very difficult to dislodge. I was just wondering if you see anything on the horizon from a technology point of view that would cause some problems.
My short answer is no. Jason, you should elaborate.
My answer is no as well. PayPal was the competition there, but a lot of the internet services have gone into making credit card transactions a lot easier, and that's kind of where all the technology focused or the software focused, and it's really easy to implement credit card payment systems in software now. So I think they've made it so low friction to build a payment system into your store or app or whichever, that reinventing the wheels is not going to be your focus.
Yeah, I think the low hanging fruit in the payments industry that was there when PayPal launched, which was how do I send money digitally peer to peer, that was an obvious and clear opportunity because the alternative was mailing a check. Today, we can use PayPal, Venmo, Cash App, Apple Pay, all these things to transmit money digitally. And to be able to pay a merchant, MasterCard, Visa, and American Express have locked down every single merchant in the world. So I hear the story and I hear the argument that it could be better with a different solution. I don't hear of anybody that's really upset about the current situation.
Yeah. Right. And I think another competitor's already kind of come and gone is all the digital layaway systems.
The buy now, pay laters?
Yeah, buy now, pay later. Mm-hmm.
Yeah. They're still there, but it's not that different, right? But no. Again, layaway was a really small business. And sure, they made layaway bigger by letting you take the item home.
I think they're realizing that risk.
Right. So what's left? Cross-border payments. That's tricky because of regulatory stuff. I mean, use crypto for that. That's a better, faster, easier way to transmit money abroad. But are corporations going to use that as a workaround? Probably not, because the banks would be happy to figure out a way to make sure that you stay within the banking system. So, yeah, solution looking for a problem still 15, 20 years in.
Right. I updated page 16, which is McDonald's and Starbucks and Chipotle and Celsius and Hilton. A couple of really good companies here. I don't know whether I'd conclude at this stage McDonald's or Starbucks are really good companies. They seem very flat to me. But Chipotle just continues now. It's very expensive. It's 50 times free cash flow. But I don't know whether you people still hold Celsius. I think you became aware of Celsius during COVID. But, it's been kind of a rocket ship. But presumably, it has some, it could come unglued pretty quickly as well. But how do you view kind of that type of business or that kind of equity holding?
We do still hold it, and we're surprised it wasn't the most expensive one on this sheet. They recently said that they have a nearly a 20% market share in New York City. So those of you on the call that are in New York, I wouldn't be surprised if you've seen it around a lot more. And that 20% is getting them extremely close to overtaking Red Bull as the number 2 energy drink in the market, which might happen this quarter. We see there's a couple big markets. South Florida is their biggest. It's their home market, their biggest market. Southern California is a big one, and New York's a big one. They're in all of those. In South Florida, I think they have 25% market share, but nationally they're at 11%. So we see there's room to grow there as they grow into a market share that they have in some of their earlier markets, and they just started an international expansion as well. Through they're using Suntory as their distributor rather than Pepsi. Pepsi being their U.S. distributor. So the stocks run up. It's performed really well, but we see still a fair amount of growth ahead for them.
Yeah, there'll likely be opportunities to buy it cheaper than it is today, but it's, you compare it to the ones that are on this page, everything else on this page is a little more stable, but you're paying a lot for stability versus something that is really running a playbook that Monster has laid before it. So it's a fast follow, and it's got a brand that is superior in a lot of ways to the incumbent. So, nothing's guaranteed, but we like the risk reward on Celsius. So we'll continue to hold it for a while. I mean, if it were to double from here, we'd have to start scratching our heads again.
Yeah.
But,
Right. Remember, you can always sell half, then you're only half wrong.
Okay, let's take a quick break for a message from Oak Cliff Sailing.
Hi, I'm Dawn Riley with Oak Cliff. We've been talking about the big boats and getting boats in the water and match racing. Today we're talking about high performance. We're here with Shweta Shergard, who's our high performance manager on Oak Cliff's High Performance Beach. How's it going?
Oh, I'm so excited to the start of the season, and I'm just getting some boats ready so that we have a rock and roll season.
And we're giving you a little preview because there's a press release coming out that is epic. It's making Oyster Bay the epicenter of high performance sailing this summer. We have Triple Crown regattas awarding prize grants. We have BMQR and with American Magic sponsoring coaching with Fuzz, who's legendary, and we've partnered with SailGP. So we've got the America's Cup, SailGP, High Performance Beach, Olympics. You know anybody who is going to think that they might want to go to 2028, they need to be here this summer. Go to oakcliffsailing.org and watch for the release tomorrow.
And now, back to the show.
We can't go a full 30 minutes without circling back to page one and talking about Tesla news, because Elon Musk seems to be able to generate news out of thin air, including, I guess, recently more layoffs in their California operation and fairly low units out of, in China. I guess the Chinese have some kind of reporting entity that reports deliveries by month. To go even a full week, 7 days without Elon Musk news is like next to impossible. But what do you see that's happened since we were last together last Wednesday?
I guess I've seen more news on the supercharger network. So they laid off, I don't know if it was all or the majority of the charger network team, but they're hiring a number of those folks back. And more clarity was it seems like they're satisfied with the design of the superchargers, and that's what they were cutting. But they're not going to stop building out the supercharger network. So they're going to acquire new locations. They're going to set up new chargers. They're going to operate the chargers. They're just not going to design any future updates to those chargers. And then there's rumors out there as well that they're courting BP as a buyer for the supercharger network. So as we discussed, I think 2 weeks ago, maybe is, the potential that they don't want to be in the charging business. They don't want to sell electrons. They want to sell cars. So that would kind of make sense.
Yeah, there's never. It's amazing how much drama follows this guy around, and that he's willing and able to handle all sorts of SpaceX issues, ranging from the Starlink satellite cluster having to deal with that solar storm, to having to testify again based on a SEC subpoena related to the Twitter acquisition, and I guess there's another EV company launching something similar to the Model Y in China, so that's another piece. So there's no shortage of Musk news. I don't know that there's anything that interesting. I will say that that same JP Morgan analyst who we remember did the 10 things for 2024. That's at least picked up the torch for that segment. His monthly analyst letter discussed autopilot, and it was interesting in that his point was he doesn't think that the federal government is going to enable the robo-taxi business. I think they're actively trying to slow it down because of complaints from a number of unions. So it'll be interesting to see how that shakes out, but it definitely paints a little bit of a negative picture when Tesla's planning to announce this robo-taxi thing on August 8th. So we'll get to continue to monitor that.
I've run into a couple of people who have given up their wire connections and just do everything from Starlink. And I said, well, can you download 2 movies at a time? They said, yep, no problem. So, I mean, Starlink sounds like, I mean, the wired companies, we talked about Comcast earlier, Charter, have been losing some business to the fixed-base wireless, T-Mobile, Verizon, who have extra capacity because 5G never really, they developed all this for 5G, and then there was nowhere near as much 5G demand. But an additional competitive threat, I think, is Starlink. Although I guess you guys are not about to, I know Mike has Starlink on the boat, but you guys are not about to go to Starlink at home, I guess, or in the office. Or
It doesn't quite pencil out to do it. We'd be happy to switch to Starlink in the office. Actually, Starlink would be faster than our previous service. We now have Verizon 5G in the office, and it's great. But what we had before was an AT&T cable connection, and it was very slow. Starlink would be a huge improvement. But it does come down to cost, and currently Starlink is a premium over these 5G connections.
Right.
But if you're not in an urban environment, that trade-off might be worth it.
Yeah. Yeah, you may not have a choice. You're way away from towers or being able to be hooked up with wires.
Well, and at the end of the day, $125 a month or whatever it is not insane for a satellite-based connection that's as fast as a cable connection or faster.
Right.
No, it's quite amazing that we've come this far.
Yeah. Dial-up wasn't that long ago.
Yeah. Just in passing, this is an interesting topic which we can follow up on next Wednesday. Do you think that our handheld devices with the developments with OpenAI and Google, do you think that we may just hardly need screens, and that any of us on the phone talking to our iPhone or our Galaxy or whatever, and then the iPhone or the other phone, Galaxy phone, talking back to us? I mean, if we had to think ahead, 18 months from now, 24 months from now, is that, I know you people are high on the glasses or the headsets, especially you envision a bunch of people on an airplane, all with their headsets. How does doing a lot of stuff that we do with typing things in and reading things, going to, just discussing things with our Siri, how likely is that, do you think?
I hope so. I mean, that's my hope, is that we can go to mostly an audio-based interface. Obviously, we'll need screens for some stuff, but maybe we could get away from, every time you pull up to an intersection, somebody walking across the street staring at their phone. Maybe some of that stuff changes, and it'd probably be a positive for the world and for everyone. Probably not a good thing for the Apple and the device manufacturers, because I keep making this case: is why do we still have phone numbers? They will go away eventually, and do we really need quote unquote phones? So I think that's coming. I think the next generation of the Meta glasses are going to be potentially no screen still, but audio-based interaction with an AI model to do a lot of the things we normally do on a phone.
I'll take the other side. I think 50% of the time we'll want a screen. And I don't really want to live in a world where everyone's talking to themselves, walking around or sitting on the subway or whatever. But if I'm in my car, there's a lot of implications for Apple CarPlay and Google's product for a system like this. But I think we've built the mobile internet to be kind of video and picture centric. So I think we'll have a hard time pulling screens out.
Okay, well, to be continued next Wednesday. In the meantime, everyone be well and stay healthy, and we'll be on exactly a week from now. Take care.
The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future and may or may not hold positions in the securities mentioned.